Warren Buffett, he's basically a rock star of the finance world. He's a self-made billionaire, and at the ripe old age of 89, he is still the CEO of Berkshire Hathaway, which is a highly successful investment company. So naturally, when Warren speaks, we listen. Back in 2001, Buffett shared his thoughts on the best indicator of market valuations. And so in today's video, I want to share with you what that indicator is, if it's relevant to us here in Australia, and have a look at what the indicator is telling us about today's markets. Hello guys, Brad here from The Guided Investor. Welcome back to the channel for another video, and if you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. Back in 2001, Buffett said that the market value of all listed securities in comparison to GDP, or basically the size of the share market versus the size of the economy, is the best single measure of share valuations at any given point in time. So this has naturally since been referred to as the Buffett Indicator. It's said that if the stock market is below 50% of GDP, then it's too low. If it's between 75 and 90% of GDP, then it's about right. If it's over 115%, then it's too high. And now that Buffett indicator is currently telling us it's sitting at 144%, which is the highest it's been since about 1970. Although this chart refers to the US stock market and the US GDP figures, it's still highly relevant for us here in Australia, simply because the US is the biggest economy in the world, and basically what happens in the US, we tend to follow. If we look at Australia's version of the Buffett indicator, it paints a similar picture. However, we don't currently have any 2020 GDP figures to work off, so it doesn't really paint the picture of what's happening in today's market. So the Buffett indicator is telling us that the stock market is overvalued, and this is probably the reason why Warren Buffett himself is holding on to $137 billion of cash at Berkshire Hathaway. In fact, the only significant move he's made in the current market downturn is to sell $4 billion worth of airlines. So is the Buffett indicator correct? Is the stock market currently overvalued? The short answer is yes, I do believe it's currently overvalued. However, and this is a big one, there has been so much stimulus pumped into the markets. Sure, economic growth is slowing and we are likely already in a recession, but you have to remember that the share market prices are not determined by economic activity. They're simply determined by supply and demand. We are seeing companies that have had a 50% hit to their profits, yet their share price is only off 20%. Now, this doesn't make a lot of sense from a fundamentals perspective, but if you take into account the amount of stimulus that's been pumped into the markets, it's basically like having inflation in stock prices. In addition to the money being pumped into the markets from the fiscal stimulus, we're also seeing record low interest rates. So you have to consider from an investment perspective, if you hold your money in cash, you're basically losing over the long term because the amount that you earn is not going to be more than inflation. So this makes people ready and willing to go to jump back into the share market. Also, let's not forget that economic data is backward looking and share prices are forward looking. So with share prices remaining strong, or at least for now, it could simply mean that people's outlook on the whole COVID-19 situation is that it's going to get better quickly. However, despite all this, I do think fundamentals will win out in the long run. Like Buffett, I remain cautious. I think the economic hangover from this COVID-19 is going to be significant, and I think at some point that's going to be reflected in the share prices. So for now, I'm going to remain conservative with my cash. But of course, this is just speculation, and I wouldn't make the bold move to sell out of all my holdings based on speculation. Just like Warren Buffett has only sold out of one sector, which he thinks is particularly impacted by COVID-19. So instead, what I'm going to do is continue to accrue new cash, and when I see an opportunity, I'll start to use that new cash. To finish this one off, let me leave you with a quote from Warren Buffett at his recent Berkshire Hathaway shareholder meeting.
I'm not saying that this is the right time to buy stocks. If you mean by right that they're going to go up instead of down, I don't know what they're going to go in the next day or week or month or year. But I hope I know enough to know. Well, I think I can buy a cross-section and do fine over 20 or 30 years. And I think that's kind of for a guy 89 that's taking kind of an optimistic viewpoint. But I hope that really everybody would buy stocks with the idea that they're buying partnerships in businesses and they wouldn't look at them as chips to move around.